The Monetary Policy Committee is expected to announce its decision on the repo rate today as the central bank concludes its three-day meeting. Analysts say they expect the South African Reserve Bank to remain in a mild interest rate cutting cycle, cutting the repo rate by 25 basis points, bringing it down to 6.5%. The combination of weak economic growth, the tame inflation, and a positive global economic backdrop support the case for a rate cut. Well, markets commentator Tony Modise joins us on the phone line. A very good morning to you, sir, and thank you so much for joining us here on ANN7. Now, what economic factors will influence the MPC rates decision today?
Good morning. Thank you for having me. What we're really anticipating, we're really anticipating a rate cut, looking at the economic factors that basically been arising within South African economy. The beautiful thing is we're starting to see that inflation has been within Reserve Bank targets, which is really good, and it is really pushing giving the Reserve Bank the good chances to cut down the interest rate moving forward. The idea will be really to preserve the currency and also to reduce a little bit of pressure on consumers, even though inflation was up by just a fraction of 1% currently, but then it is still within par at the back of rising petrol prices. But moving forward, we'll see the Reserve Bank moving on with their cutting of interest rate process.
Now, Tony, we do know the World Bank this week revised SA's 2018 growth projection lower. Or will this play a part in the bank's decision?
Of course it will. Well, they reduced the growth rate at the back of the recession that we've been into, but then now we are out of recession. As you are out of technical recession, this means that there's a little bit of growth in South African economy, and also considering the fact that there's a couple of bonds. I think it was around 2.5 billion foreign currency bond, which were issued on Tuesday, and then they were purchased. Even the orders were above the value of the bonds, which is quite beautiful. And it's starting to show a little bit of investor confidence coming within the South African economy. What the Reserve Bank might try to pay attention to is to pay attention to business confidence and also pay attention to consumer confidence as well. Putting attention to consumer confidence, it's around cutting down on interest rates that will reduce pressure on indebted people so that a lot of consumers can have surplus funds to be able to push up South African retail sales as well.
Well, thank you so much for joining us. That was market commentator Tony Modise on the phone line, just giving us some information as to what we can expect to happen today at the Monetary Policy Committee.